Hey guys, welcome back to the channel. Today I'm going to be talking about the worst case scenario for Bitcoin and what that would look like from my perspective. But before we begin, I just want to mention that while I do think the scenario is possible, I would by no means consider this my primary view. In fact, my primary view is that we do have a low in place or that we're extremely close to one, so call it maybe the 17K region plus or minus 5%. But with crypto and investing in general, we're always going to be dealing with probabilities, and I think that if you're ruling out the probability of a lower low completely, you're just not doing yourself any favors. And you would just be unprepared and without a plan in that extreme event. And for me, the extreme event would be a low of around 11 to 12K. So I'm going to mark out that region on the chart here. And one of the things I want to talk about first is the fact that if we're just looking at this level longer term, this was extreme resistance back in the years of 2018, 2019, and 2020. So we can see this second lower high back here in 2018. We actually came up to this level. We rejected off of this point and then we continued lower. So this was established resistance. And then we just had more resistance here in 2019 where we did have some wicks going above this level, but ultimately the candles were closing under this. This was the level we rejected at, and then we continued down to form that $3,800 low. And then again, you can see another rejection here later on in 2020, this one being a lot shorter. And actually we did come back above this level and then have a more convincing breakout later on. And one of the things that I'm looking at this convincing breakout is that we really started to elevate the bull market at this point. This is when the rate of change really started to increase. We ramped up this move, and ultimately this is a level that when we broke out of, it was gearing up into that mania phase. So I would consider this to hold strong support in that extreme event that we do have another leg down. And ultimately, I don't think this level would be lost even in the worst case scenario. Another thing that we can do is we can look at the percentage drawdowns of the previous cycles and basically look to this as maybe a gauge of what is possible. Again, what is possible and what is most likely are two very different things for me. So if we look at this bear market here in 2014, we basically declined by about 86.6%. And then if we're looking on to the 2018 bear market, we basically declined by about 84.2%. So if we're just sort of following the trend of an 86% decline, 84% decline, maybe we call it an 82% decline, that would sort of be the same trend. And that would take us down to, again, that level of around 12 to 11K. You could compare it to the previous cycle and say maybe we have an 84% decline in store. That would bring you to around 10.9. Again, all possible for me, but I still don't think this is the most likely scenario. And again, we're just doing this as an exercise. If something like this happens and you can't stomach that move, then I would say maybe there's a possibility you're over allocated to your position. And I'm not trying to do this to scare anyone. I'm just saying that, if you're ruling out this possibility completely, again, I don't think you're doing yourself any favors because that would just be at the very least the same decline that we had back in the previous cycle. But again, I don't think that's my primary view because one of the arguments to be made that this is sort of unrealistic is that, well, we didn't have as far of an extension to the upside. And what I mean by that is if we just take a measured move from the 2013 cycle peak to the 2017 cycle peak, we rallied by about 1,500%. And then from the 2017 cycle peak to the peak that we had back here in November, it was only a 250% move. So the argument here is that because we weren't as extended to the upside, we might not have as severe of a bear market. Again, only going up 250% from peak to peak as opposed to 1,500%. So that extension to the upside was definitely reduced. The volatility to the upside was definitely diminished. And maybe that volatility to the downside would also diminish and we wouldn't have that typical 85% correction during the bear market. Again, all scenarios and possibilities that I think you should consider. And again, just to reiterate, I don't think we're going to be retesting the 11 to 12K region, but in the back of my mind, I know there is a possibility that something like that were to happen. And I'm going to be asking myself, if something like that were to happen, what am I going to do? Do I have a plan? Am I prepared? And I think you should be asking yourself the same questions because if you don't have a plan and you get caught off guard, you might make a bad decision down here. So I hope you guys did enjoy the content and the analysis. By the way, make sure to check out our sponsors in the link in the description below. We're partnered with FTX.us. It's a great cryptocurrency exchange. I do recommend checking them out. Also, by the way, you can check out our Twitter. I'll leave the link to that in the description below. As always, I hope you enjoyed, and I will see you in the next one.